Donahoe and Russell Gray, co-host of the Real Estate Guys radio show, here with another edition of Boots on the Ground. And this time we're going to be talking about something a little bit more esoteric. It's called the Perpetual Wealth Strategy. And here to help us understand that and what's going on in this really interesting corner of the financial world is our good friend from Paradigm Life, Patrick Donahoe. How you doing, Patrick?
I'm awesome. Russ, how are you doing? It's great to see you.
Good. I like hanging around with awesome people. So you and I always have these really interesting pre and post mic conversations. But, for anyone that's just kind of checking in and really doesn't know who you are or what you do, give us the 3-cent tour on what this perpetual wealth strategy is really all about.
Sure. It's just it's simple, more simple than it sounds. And it's a way to use life insurance as part of your financial life. It plays a specific role. It's not the end all be all, but it plays a specific role that brings more certainty to the results that you're after.
Yeah. So it took me a long time to get my mind around this because, when you think about life insurance, you think about, term insurance or whole life insurance, but there's a whole host of products that really attach to these whole life policies, number one. And number two, there's a whole host of tax benefits and legal structuring around that because it's a very powerful lobby and has been a very powerful force in the financial industry for centuries. And certainly throughout the last 150 years here in the United States. And so it's really become a tool of the high net worth people. And one of the things that you've been able to do is bring that to kind of the millionaire next door, the folks that have a pretty good net worth and they have some cash and cash reserves and they're looking at the banking system and they're looking at the yields they're getting and they're looking at counterparty risk, which is something that people tend not to be concerned about when they have low cash balances. But when you start getting into the higher cash balances, all of a sudden, you need to be thinking about the strength of that bank, especially in the area of Dodd-Frank. So tell us a little bit about how your clients, who they are demographically, and a little bit about how their lives are going in the wake of this whole COVID-19 thing we're experiencing.
Well, first off, just to expand on one thing that you said, it's the use of something, right? I think tools in and of themselves have some value that you can justify, but really, the use of it really comes down to the investor. And I was fortunate to learn from a woman who was very experienced in the industry. She was actually one of the first Rich Dad advisors, Kim Butler. And that was the big thing. It's the use of a product and the role that it plays within a financial strategy. And so we've been fortunate because we operate online and over the internet. We've done so for 13 years now, hard to believe. And we've been able to, attract lots of different people in all walks of life. And as much as it's challenging, it's also very enlightening, and it helps to really teach us ways in which you can use one product to improve a host of financial situations. But right now, it's been one of those interesting times. I think we're kind of in the eye of a storm in a sense where, we had this, it's kind of like the tsunami, the earthquake happened offshore, and it's like, it's coming, but it's like, it's still decent outside. So, it's one of those things where our clients are concerned. At the same time, life is different, mainly because they can't go outside. And so I've seen a couple of themes with clients. Number one, they're in a very good financial situation and they still have employment, whether it's, employment at the same place or they have a business that they've successfully taken online, as well as their employees. And those individuals are being presented with lots of investment opportunities. And so it becomes this, I have more cash flow because I'm not out spending or traveling. I have more cash that's piling up and I have all these opportunities that are being presented. And, it really comes down to financial education and understanding how to analyze an investment, stress testing it, seeing where, the principles are and their experience. And does it make sense in an economy that can go this way or that way? So it's been a really interesting situation. I've had to talk people off of a cliff with some of the investments that they were planning on making. But then there's also instances where tons of opportunities are available because entrepreneurs are figuring out how to solve problems. One in particular is a conversation I had yesterday, and the client is in a very good position, very good situation, and he is about to invest some money in a fund, right, that has a marketer as a partner and a guy with 50 years of business strategy that knows how to buy assets out of bankruptcy. And it's, there's tons of assets that are going into bankruptcy right
Yeah.
now. And it's an incredible opportunity, because if you really look at some of the retail places that are going bankrupt, right, it's all about how they do business and their marketing, right? It's not necessarily the sector or the industry. And so you have some very interesting things that are going on, but, we have a lot of clients in that situation, but we also have clients that, are not, they don't have the employment, they don't have the productivity they used to, they're not making as much money as they used to. And so it's really become this reprioritization of their expenses, their assets, but also employment, and figuring out how to make more money in a new environment, which perhaps requires some new skills.
Yeah, I think that's such a great point, because you've got people who are, in good shape and in a position to take advantage of, some of the bargains in the marketplace. And of course, I always hate to use the word take advantage, because on the flip side of that, you have people that are struggling, that are having to relinquish those assets. But at the same time, when people are putting things up for sale and trying to get liquid because they weren't liquid enough going in, or their business wasn't resilient enough for this particular thing. And that's not a judgment. I mean, it's a lesson, right? I've had, as you well know, Patrick, I've had a business fail because I wasn't resilient for the storm that came. What I learned was a new way to structure my business to be more resilient. So even though it's painful, everybody kind of gets their turn, right? It seems like business comes in cycles. Some days I'm envying people, and the other days I'm feeling sorry for the very same people. It just depends. So we all have our ups and downs, but it's good
to know. That's the common paradox of life. What we, really don't want is usually what is best for us, and what is the most painful is usually going to teach us the most. Not always true, but in a lot of cases it's true.
Well, if you approach it with the right attitude, and I think that's important. And the other thing is, I think if you approach it with the right advisors, one of the reasons we started doing these boots on the ground is because with only 52 episodes of our radio show every, year, we just don't have enough ability to put out enough content. And of course, when you're having to follow a radio show format, you have to fit in a certain slot, you have to hit your breaks, got to make your commercial spots and all that. And, we don't have to worry about that doing this. So we just have a conversation. We try to keep them short because these are updates, but it always takes a little bit longer with you because your world is like a little confusing, but it's important. And the reason it's important is because, in any game, and investing and building a portfolio, if you liken it to a game, you got to have both offense and you got to have some defense. And when I think of where I categorize you, I put you a little bit more in the defensive category. And I think about the types of problems that you help people solve. Obviously, when there's an unexpected death, you have a liquidity problem, typically, sometimes a tax problem, which creates a liquidity problem. And then you need to buy yourself some time, depending on what the cash flow requirements are and what changed, to be able to liquidate some assets. So that's the basic function of insurance, is like immediate liquidity.
Definitely.
But it's so much more than that, because you also have a place you need to store cash that you feel is safe and that you're going to have access to when you need it. Some people use real estate and they build up equity in real estate, and then they throw a home equity line of credit or an equity line of credit on a building, and then they use that to tap into their liquidity. But then the problem is, when the credit market sees up, now they've got to qualify. The lending may not even be there. They have to pay fees. And so your product actually helps people have a place they can store fairly liquid equity that's backed up not by bank balance sheets, but by insurance company balance sheets, which are arguably much stronger. And so that's another area. How else, in what other ways does what you do, what kind of problems from a defensive position do you help people? Liquidity, and we talked a little bit about, obviously a place to store equity on your balance sheet that's readily accessible but safe. I like precious metals for that same reason, but you do have the currency exchange risk, whereas with yours you don't. But there's also some privacy benefits, some tax benefits. Talk a little bit about those.
Well, let me hit on one thing, because what you said is profound. Because I look at, when you position certain assets and position your financial statement a certain way, what it does is it helps you see things differently. I look at, if I had I look at it two ways. If I had a certain amount of liquidity in 2008, 2009, right? In hindsight, I would have known what to do and have been able to capitalize on a lot of opportunities. At the same time, the lessons I learned during 2008, 2009 gave me that perspective. So it's kind of a contradiction in a sense. But I also look at right now, what we're experiencing is a very emotional game. It's not a logical game. I don't think people are taught to critically think and what's going on, whether it's the political sphere, whether it's the racial sphere, whether it's the wealth inequality gap that continues to widen. You have a lot of emotions going on. And in order to not be influenced by that, okay, you have to understand it, number one. But number two, I think you can position your financial statement that allows you to have, reserves, liquidity, so that if something were to happen, you have plan B. And there's a number of ways to have plan Bs. Gold is one of them. Second passport is another one. So plan Bs often put in a state where you look at things differently and remove as much emotion as possible. So I believe that, those are where the opportunities come from. And I think that those that learn from hard experiences are poised to be able to understand that kind of behavioral curve and capitalize on it, because it's the inverse. So it's when people's, it's the Warren Buffett, or I think it's Warren Buffett, right? When people are fearful, be greedy, and when people are greedy, be fearful, right? It's kind of an inverse relationship. So I look at that as a very important piece of having this as a foundation. At the same time, that's just liquidity. That's an opportunity fund held with an insurance company in the form of cash value. But there's, as you mentioned, privacy associated with it. The privacy is it's a private contract, so it's not listed on any public record. So there's some asset protection benefits to it. You also have the guaranteed loan provision, which is similar to a line of credit, but it's guaranteed. And you also have dividends, that is interest paid to you because of the success of the insurance company themselves. So you have all those different benefits, plus you have some tax benefits. At the same time, it's not the end all be all, right? Because if you compare that to a piece of property, it's not going to perform as well as a piece of property, because property has lots of tax benefits as well.
Property, I would consider, Patrick, to be more offensive. And that goes back to my point. Most investors I know, everybody wants to play offense. That's how I was going into 2008. Offense, 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 offense. And the problem is that, when I played football, it was two things, right? It was, number one, if they don't score, we can't lose. The flip side of it is, if we don't score, we can't win.
You can't win.
Right.
Yeah.
So you got to play both sides of it. And so some people have the philosophy, well, it doesn't matter how much they score, we're going to score more. And you've seen those games. They're very entertaining to watch, but they are just heart stoppers. If you want your life to be a heart stopper, right? The games that are boring is when a team comes in and takes complete control, dominates the time of possession, the score, doesn't let the other team really score on them, and they might win 9-0, but they completely dominated. Right. And so I think that when you're facing the kind of times we're facing, and I think your eye of the storm thing at the top was really, really accurate. We've talked about this being a 4-phase cascading crisis, the first one being the health crisis, the next one being the economic lockdown, which stops commerce and cash flow, which ultimately causes capital markets and debts, banks, they start to fail. And when the financial system starts to break down, it's all about defense. It's all defense. It's about liquidity. It's about access to funds. It's about avoiding counterparty risk. It's about privacy. It's about all those things. And then, of course, the tax side of it too, because you start seeing desperate municipalities and governments at some point. I mean, not everybody has a printing press and can just print to the moon, right? At some point, the taxes have to get raised. And so the sooner that you begin to start to structure some of that, obviously it's a big selling point for real estate. And I think a lot of what you do, if people look at it from a financial strategy perspective, the way they do real estate, not as a property, not as an income producer, but just in terms of being able to, equity and tap into equity and tax breaks and cash, arbitrage, if you will, borrowing at one rate and making money at a higher rate, those principles translate directly over into what you do.
Well, financial principles, right, are something that I would say successful investors understand. They look for those principles within opportunity as opposed to just the opportunity itself and the details of the opportunity. And that's, again, where I go to financial education. And sometimes, this is just me, right? It's my, it's my rule of thumb, which is, I don't usually want to do business or invest with somebody that has not failed and failed big, or at least gone through some failure
Well,
times.
we should be partners.
I know it's one of those things where that's me. I'm not saying that should be the case. But in the end, I don't, I think you can tell if a person has principles and values by how they live. At the same time, you have, sins of omission, sins of commission, right? And so omission is ignorance, right? And not going through certain, hardships, right? You tend not to see where there's risk, right? Your risk tolerance is probably high, and your ability to mitigate it is low.
Well, I mean, you
And
don't know what you don't know. It's like a little kid that has never burned their hand. You can tell them all day long that burner's hot, but until they burn their hand, they don't get it. The minute they burn their hand, they totally get it. And so I think that there's a lot of young folks, sometimes I have to remind myself how old I am. And there are people out there right now who've been investing for a decade who haven't been through a crisis. And so they don't really know what that's like, and how important it is that when the clouds start to form, which they are, or you find yourself in the eye of a storm, as we are, that you don't think that it's over or it's not going to hit you, that you begin to take put some defensive strategies in place. And when you haven't even thought that way, or you haven't surrounded yourself with people who think that way, or you don't have any advisors that even play the game that way, then you don't even know what you don't know. So if you've made it this far into this and you're watching this, then maybe what you want to do, Patrick, you did a cool thing. You wrote a book, which you sell, but you told everybody you'd give it away to them for free if they send an email to my bank at realestateguysradio.com. It's called Heads I Win, Tails You Lose. Give us like the 3-second tour, the 3-minute tour on that. The
cool,
3-second
yeah.
tour,
That
tour.
was,
That's what I meant.
That was a very expensive title. I flew out with some business coaches who were marketers, and we spent 8 hours of a consulting session just coming up with that title. But it's Heads I Win, Tails You Lose, a financial strategy to reignite the American dream. So the Heads I Win, Tails You Lose, I get this question a ton. But I believe that the system is set up against us, right? And whether it's the education system, whether it's the
I think people are waking up to that right now.
Yeah.
They're realizing this is a rigged game. And that's
and
okay.
that title,
if you understand the rigging, you can still navigate it, but you can't. I mean, imagine playing a game and you don't even know the rules.
No. Yeah. I mean, yeah, Jerome Powell spoke today and did his song and dance, but for the most part, people really don't understand the details of what he said and how it relates to them. And it's just one of those things where, there's lots of surface level stuff, but in the end, if you really look at the evidence, I don't believe the financial system is set up for us to win. The education system is not set up for us to win. The political system, I mean, you can just keep going down the line. So Heads I Win, Tails You Lose is a saying that really comes from the political sphere, which is how to design things so you will not lose. So it's kind of flipping things on end. So a financial strategy to reignite the American dream is essentially a multifaceted financial strategy. Obviously, it's insurance as a foundation, which we advocate, but it also comes down to really having employment that's meaningful, producing, whether it's as an entrepreneur or business owner, doing something that's meaningful. And there's jobs out there all over the place that pay really good in these weird niches, like professional video game players, professional video game commentators, right? And then, you could make tons of money on YouTube by opening, toys. There's kids that are making, millions of dollars a year just videotaping the opening of toys. So it's one of those things where I think that the creativity aspect of a human being is able to be monetized in a form of employment. So that's part of it. And then the other part is investments that cash flow, and investments that you understand and are educated to make. It's not handing your money over to someone and expecting that they are just going to do exactly what you would do. So that's kind of the gist and the I would say Reader's Digest version, shorter than the Reader's Digest version of the book.
Yeah, well, I think that's good. We need to wrap up because we've been at this for a while. Every time I get together with you, I just feel like we could go for hours because unpacking your brain, and, you like to explore all the little niches and nuances, and I'm the same way, and we go on and on and on. But the point is that this perpetual wealth strategy is a defensive strategy that allows you to take some equity from your balance sheet and put it someplace outside of the banking system, where it's more private, where it's backed by the balance sheets of the insurance companies. And we didn't get a chance to talk about this. So next time, let's make sure that we talk about it, because the strength of the banking industry versus the strength of the insurance industry, those are very different.
Very
And
much.
I think that people need to pay attention to that, because the thing that gives the banking industry strength, if that ends up going away for some reason, if for some reason the federal government or the currency or the Federal Reserve's ability to be taken seriously begins to unravel, you're going to want to have stronger balance sheets as part of where you store some of your liquidity. But the privacy component, the arbitrage component, which we didn't even get into. So
Mhm.
these are all really important concepts. I know you address them in the book, mybank@realestateguysradio.com. Contact information for Patrick is down below. He's happy to have him or one of his team do a consultation with you, talk a little bit about it. But I know that your head might be spinning a little bit because it's kind of hard to get your mind around. But a lot of very wealthy people, big corporations, take advantage of this strategy, but you do have to invest some time learning it. And we'll do these occasional check-ins with Patrick, and it's really designed for people to kind of know what's going on. But since we're kind of in the early stages of these check-ins, I thought that it would be good to kind of set the table with some of the background information. So any closing thoughts, Patrick, before we wrap up?
No, thank you, Russ, for the opportunity. I love speaking to you. You know, things are moving really fast, and I'm glad that you're doing these more frequent check-ins because, you know, the eye of the storm doesn't last forever. You know, there's going to be, I would say, some consequences and some unintended consequences associated with what's going on right now. It's going to be an interesting, it's going to continue to be an interesting year, and I'm really excited to see how it unfolds. And it's good that you're doing this so that people can, you know, maintain that logical perspective and balance out a lot of the heightened emotions which are inevitable.
Yeah, well, a lot of mainstream financial media has a lot of agenda attached to it that's about promoting and protecting Wall Street and the banking system and kind of the establishment, if you will. And there's a lot of stuff happening out on Main Street a lot of people just aren't aware of because nobody's telling them about it. And that's why we did the Crisis Investing series. That's why we did the Silver series with Dana Samuelson. We've got more stuff in the pipeline. But we want to connect people with people like yourself that are actually doing these things in the real world, working with real people that are having success and that are rearranging their balance sheets to prepare for what's going on. And so if you're not in that club out there and you're listening to this, now is the time, right? Don't wait. Don't wait until the storm is upon you, because this is the eye of the storm, I think. And if we're wrong and you end up spending some time and effort getting educated and prepared and nothing happens, how are you worse off? You'll only be smarter and more prepared if something unexpected comes up. And last time I looked, that happens from time to time. So thanks for staying tuned with us. Patrick, thanks for sharing your insights and wisdom with us. We'll look forward to doing this again.
Thank you, Russ.
Thanks.